Welcome back to the channel. Whether you are a seasoned trader, a tech enthusiast, or someone who just bought their first stock on a whim, this video is going to change the way you look at investing. I am breaking down 10 hard-hitting, true, real-world lessons from some of the best stock pickers in the game. These are the best lessons Wall Street learns the hard way, so you don't have to. Lesson 1. There will be blood when you pick bad stocks. Alright, let's get this out of the way. If you're investing in the stock market, you're going to lose money sometimes. Yep, even Warren Buffett. Being a great stock picker is kind of like being part fortune teller, part spreadsheet wizard. You've got to be a solid fundamentalist, someone who can forecast things like revenue and profits, and also a bit of market psychologist, guessing how the crowd will react and what kind of price tag they'll slap on those numbers. And nailing both of those, nearly impossible. Most of us miss the mark more often than we would like to admit. Plus, you have got wild curveballs like the COVID crash in early 2020, market shock events that steamroll even the smartest strategies. And don't forget, you're most likely going to pick some bad performers. Markets evolve, competitors show up out of nowhere, and management teams mess up things sometimes. That sure thing you were bragging about last week could turn into a total disaster next month. The bottom line is, if you're in the game, be ready for some bruises. That's just how it works. Lesson 2. There will be blood, even when you pick the best stocks. Now, here's the kicker. Even the best stocks can make you sweat. Take Facebook, Google, Netflix, absolute legends from 2015 to 2020. Each of them took a beating at some point, with drops of 20%, 30%, even 40%. Netflix got slammed twice in just 1 year, and these weren't weak businesses. These were companies with rock-solid fundamentals, often outperforming the rest of the S&P 500 by a mile, but still, they stumble. And it's not just company drama. You have got macro chaos too. In late 2018, the market freaked out over trade war, GDP slowdown, and rising interest rates. Amazon stock dropped a third, and nothing had changed in its fundamentals. Lesson: even your A+ stocks are gonna have rough patches, and you have got to stay cool and hang on. Patience pays off. Lesson 3. Don't play quarters. Think you are gonna outsmart the market by timing earnings reports? Think again. Quarterly trading is like trying to juggle flaming swords. Looks cool when it works, but super risky and usually ends in disaster. To win at that game, you need to perfectly read both a company's fundamentals and Wall Street's expectation. Even the pros screw this up. Let's take Amazon between 2015 and 2018. It went up by 386%, but here's the thing. Only 4 out of 16 quarters gave you a 10% plus pop the day after earnings. And 4 of those quarters actually tanked over 5%. If you try to time that roller coaster, you probably miss the long-term magic. So don't play the quarter game. Instead, pick strong companies, believe in the fundamentals, and write it out. That's where the real gains live. Lesson 4. Revenue matters more than anything. Let's talk about fundamentals. And I mean the real fundamentals. When it comes to tech stocks, the number one thing to care about is revenue growth. Not just any growth either. We're talking about 20% plus top-line growth quarter after quarter. That's your golden rule. Why? Because companies that pull that off often have big market opportunities, constant product innovation, irresistible value, and all-star management. Only about 2% of S&P 500 companies hit that mark. That's how rare and powerful it is. So look for companies putting up those numbers for 5 or 6 quarters straight. But here's the flip side. When revenue growth gets chopped in half over 3 or 4 quarters, watch out. That can tank a stock's long-term potential. Unless, of course, we're in a full-blown crisis mode, like a pandemic or global meltdown. And don't be fooled. Just growing revenue isn't enough. If a company can't eventually turn that growth into profit, it's just burning cash. And in the long run, profitless growth equals to worthless growth. Lesson 5. It don't mean a thing if it ain't got that product swing. Time to talk innovation, because boring companies don't win in tech. The best business are product machines. They create new stuff, expand existing stuff, and make your life better again and again. Amazon gave us cloud computing, Netflix dumped DVDs, and bet big on streaming service. Spotify dove into podcasts and reinvented audio content. And Stitch Fix, they might have cracked their right by with data-driven fashion. If a company keeps innovating in ways customers love, the revenue usually follows. Here's a cheat code. If you, as a consumer, are obsessed with the product, there is a good chance that the company's stock might be worth a look. Also, if you see a company launch something new and then watch a bunch of competitors scramble to copy it, you have likely found a true innovator. And remember, great product teams don't stop after one win. Innovation is a repeatable habit. When a management team lands one hit, chances are more are coming. And that's it. That's the first half of the 10 timeless lessons in stock picking. Stay tuned for the second half. Thank you for watching.